I'm Alejandro Zambrano, and I'm the Chief Market Analyst here at TradeCaptain.com. And I'm going to provide you guys with a quick update on the financial markets. But before we start, as always, I need to stress that trading financial markets, unfortunately, is risky, and there's a general risk to lose all of our invested money. And if you're new to this, watching this maybe on Twitter or on YouTube, then please bear in mind that we host these daily webinars at more or less 9 a.m. London time. I think the typical starting time is like 9:10, but pretty much 9 a.m. London time here at the live trading room. You click here, and this page loads, and you can ask questions during the webinar as long as you have a YouTube account. And what we are going to cover is the euro, Bitcoin, gold, crude oil, and the DAX 30. As well, we're going to talk about today is I wanted to tell you guys about Delta Trader. I know some of you guys have heard about it in the past. I did talk about it a bit last week, but Delta Trader is a program where Amana Capital, the broker, and 514 Capital Partners, which is a hedge fund in the Cayman, where they are looking for traders to manage money. So it's a good little perk that traders of Amana Capital have. If they trade good, they could potentially be managing up to $100,000, which is a good little start if you ever considered managing money. And as well, what is interesting in general with this is that you keep 20% of any profits you make. So for example, if you have 100,000, by the end of the year you make 30%. That's a 30,000 grand return, and you keep 20% of that, which is 6,000. So it's a good little entry point, and obviously if one can prove for themselves trading with 100,000, then why can't you trade with 1 million? Not that is what they're offering, but it's a nice gateway and definitely something that could open up doors. So we'll talk more about that. As well, if you like the technical analysis, then don't forget to check out the section. I post things here. As well, Nathan used to work for a hedge fund for 4 years, I think it was, and he also publishes short-term setups here and long terms. And we have Yuri as well, based in Australia, that publishes content for us here in the technical analysis section. Okay, let's begin. So this is the euro versus the USD, and the overall market sort of maintains that bullish bias that we've been working with. You might remember that the market turned bullish when the price took out this level. I had been bearish for a very, very long time, and when the price took out this level, I turned bullish. The market did go up to the first target, then it went down to the first buy zone, and then it went up, but it didn't necessarily touch that target or break to the upside. And then it went down again to the buy zone, and then it pushed up again. And I think that will continue. You see the market did try to trade to the downside yesterday, but didn't really succeed. And I do think that this market will most likely just continue to maybe push to the upside. Now the reason for this decline, and that happened in the afternoon yesterday, is because the new head of the US Central Bank, he would like to have press conferences at all of the rate meetings. So why is this significant? It's significant because when they have these live conferences, that is when they tend to announce sort of rate hikes or sort of major changes to the policy. So people have been looking for that, and so it's going to be a little bit like the ECB. Now, his predecessors, and talking about Alan Greenspan in particular, they didn't have that. They just had a statement, a simple statement. I think it's maybe 200 words, 300 words, probably less than 300. And they used to manage very well with that, but now they just sort of want to bring up maybe Q&A sessions, things like that, transparency. I personally think it helps because you get the statement out, so people trade on the back of the statement, and half an hour later they're going to talk, and then you get a different color to the statement, and then someone asks a question, and that sort of changes the markets again. So you have sort of 3 different impulses during sort of an event, which could, if you're a trader, easily just get you chopped up because everybody buys on the statement, then they sell on the comments, and then they buy back again on the Q&A. So it's a bit of a mess, to be honest, but I guess this is the way it's going to be going forward. We also need to remember that the updated forecast, I think, is once a quarter. That's what most central banks does. I don't remember exactly when the Fed does it, but I think as well as once a quarter. And it still just at least tends to be at those times when they produce or sort of make any major changes anyway. So adding a Q&A or a press conference to every event, I personally think is just gonna makes it life more difficult being a trader. Yeah, we'll see how that plays out, but most likely it's not gonna be to the benefit. So what can I say about this then? Well, the Fed rate meeting, the actual outcome of that is happening today, and the market does anticipate a rate hike. What people are interested though is, are they going to raise maybe a total of 4 times? So up until now, they have been predicting, according to the dot plots, they have been suggesting at least 3 rate hikes. But the way I understand it is that if just one additional guy goes for 4 rate hikes, then suddenly the median dot plot is for 4 rate hikes. And we can actually check that out. So let's do that together today, and I'll show you how that works. So this is a CME Watch tool. It's a free tool. You can just Google for it. It's called CME Watch tool. I'm just waiting for it to load. So this is where we are right now. Okay, we're right now here, and the likelihood of a rate hike is 95%. So current rate between 150 and 175. This is at 5% it says. So just 5% of people are anticipating a rate hike. So 95% anticipating 1 rate hike. Now, if they don't increase interest rates, these 95% of people are going to be on the wrong side of things, and the dollar will tumble. Now, what we're looking for is what's going to happen at the December 19th meeting, because that's sort of the last meeting for the year. So again, we're here right now, and you can see that right now, this is 1, 2, and then 3, 4. So they already increased interest rates 2 times. Sorry, this is going to be the 2nd time today, and then maybe a 3rd time in December. So how do we look at this then? Well, we just aggregate. So we just bring out our calculator. We're going to do it differently. Let's take 100 minus 11.4 minus 0.5%. So that makes 88. So there's an 88% likelihood that they're going to increase, that by the end of the year, the rate is going to be between 200 and 225 basis points. And then you have this section here. So that would be, just make it simple, yeah, this would be 44%. Whereas 44% of people are anticipating a total of 1, 2, 3, so 3 more hikes. With the first one, it makes it 4 for the whole year. So 44% likelihood of having that. So there's still not a lot of people that are convinced that we're going to have 4 rate hikes. So if one of the members sort of pushes up their estimate and says like, well, you know what, guys, I think we're going to have 4 rate hikes this year, then suddenly the dollar could rally here. Just because if 44% of people think that we're going to have a rate hike, well, then the rest thinks that we're not going to have that 4th rate hike. So the dollar could gain on the back of that. And that's sort of what you're looking for. You're looking for common statements, hints that we will have a 4th rate hike. And if they push towards that, then you see the dollar gaining. If they just increase interest rates at this meeting, then not much is going to happen. So that's the way of looking at it. Now, what is my personal opinion? Well, my personal opinion is that it's just June. We had a bit of a slowdown, particularly in Europe, and I think we did have a little bit of a slowdown in the US. And they have time. I think they can increase interest rates now, and then, you know, if they really want to, I guess they can increase interest rates 2-3 months from now again, and then they push for the final one in December. So I think they still have time. They don't have to pre-commit today that they're going to increase an additional 2 times. So from that perspective, I think, definitely long-term dollar bulls, but in the short term, I want to stick with this technical scenario. But if by the end of today they have committed to increase 4 times and we have taken out the June 5th low, then I think this market is probably going to do like this. Because it's trading up here already, I guess it might do something like this. It might go down, and then it'll probably go up a bit, and then it will do something like that. Now, in the long run, according to my setup that I shared here, see if I can find it. Actually, if you're looking for a specific market, click on News, Forex, and I'm looking for a Euro setup, so I'm gonna click on Euro. Obviously, the other team, they post a lot about the euro dollar as well, so there's a lot of stuff about the euro in general. But I have a specific update I shared just a few days ago. If I can find it. Yes, this is the one. The title is A Massive Head and Shoulders Pattern Might Be Forming, and this was published on June 11th. So this is the euro, and this is a weekly chart. So you have a high here, which is potentially a left shoulder, move to the downside, and then up the head. And this is where we're trading in the beginning of the year, and then you have that strong decline. Now, this looks like the beginning of a head and shoulders to me, where we have not built that right shoulder just yet. And I think, again, that the Fed is on autopilot. I do think that maybe they'll increase interest rates 4 times. And at the same time, I do think maybe the ECB is going to be a bit hawkish. So I think, in general, the euro could potentially go up to maybe 120-ish. So sort of in line with this high. That high specifically is, I think, is 129, sorry, 123 or so. Sorry, let me see here. What's the number, actually? I can't see here. Yeah, 120.95. All right, so 120. So between 120 and 120.95, this right shoulder might potentially form. So I think still I want to insist on being bullish, in line with sort of the short-term setup I showed you guys today. And I think that this potentially then eventually goes lower. And it makes perfect sense if they raise interest rates 4 times. So if we go up and then down, and then if we take out the neckline, that's when it's time to get really aggressive on being bearish. Because if we take out this level, well, the head and shoulders pattern, if we measure the difference between these, sort of the neckline and the head, predicts that the market could trade all the way down to pretty much 105, 104.97 to be exact. So I think up and then potentially break. Now, of course, if the Fed today and with the ECB sort of the Fed is really hawkish, the ECB really dovish, then maybe we'll take out that neckline already by the end of the week. And then if we do that, I will still be bearish because we're dealing with a downtrend, and a break here would open up for a move to the downside. It's just that I wouldn't be comfortable in projecting that we're going to go all the way down to 105. Maybe we'll take out the low and go down to 112 or maybe 110. And then sort of when we start to reach these levels, we sort of would need to pay attention to what happens there. So I think this fits very well with sort of the macroeconomic or general macroeconomic narrative, which is that the Fed is hawkish, reducing their balance sheet, and then the ECB probably is going to be dovish. But for now, the only thing you need to worry about is that June 5th low. Bullish above, bearish below. If we take that at that level, we'll look at the market some more. Let me take a look. We're actually going to continue with the normal programming, and this is Bitcoin against the dollar. Now, yesterday, the crypto markets continued to move to the downside across all crypto markets, or across all top 10. The average decline was about maybe 8 to 12%. So you had some coins like NEM, which had massive head and shoulders triggered, and sort of predicts that the currency is going to go down to a negative value, which obviously can't. So it's not looking good right now. And we need to be clever from a trading perspective. Who cares that this is going to revolutionize the world? We still need to be clever about managing our risks, taking losses when we need to, and so on and so on. To give you an idea, I traded the upside in November and December, and I got out somewhere here. And then I bought some here, managed to make money on this section, and then I got out here. Then the market went down, and then I tried to buy here, didn't really work out, and I got out for a 5.5% loss. And now Bitcoin continues to trade to the downside. Forget that it says Bitcoin up here. It says the euro dollar. Doesn't matter. Don't be married to the market. Just trade sort of the price. You can trade on the back of the news as well and macro fundamentals, but don't fall in love with the whole idea that, you know, it's going to revolutionize the world. Yeah, of course it might revolutionize the world, but it's not going to happen today or tomorrow. And because of that sort of long-term view you have this huge volatility. I'm not saying you should sell everything, but you just need to mind your risk. Of course, if you're in a bad position to begin with, then yeah, maybe it's worth just holding on to that. It's very typical for traders that, you know, they almost lost like 70% of the money, and then, you know, they might as well just keep it, I guess. It sort of depends how much money we're dealing with, but you know, from a 70% drawdown, it's very difficult to get out of there unless you inject new capital into your account. Okay, so today, what's going on? Well, the market remains bearish below this high. The market went all the way down to the April low, and I think if we take out that April low, we're probably going to target the low down here. Now, from a purely technical perspective, the best entry was just to sell here. This was the best entry, to sell up here when that decline happened on the 10th. Sell here, stop loss on the other side, so you risk 11%, and right now you should be up at 7. If it continues to go down, maybe you make 15. That's sort of to get those good risk-reward ratios. Now, if the selling here right now is people because they need to sort of avoid capital losses. So this is not the optimal level to sell. Of course, like always, it's possible to scalp. You could maybe get away with, you know, selling on a break to the low with a short-term high on the level here. It's definitely possible to scalp, but sort of the better setup was to sell up here. And I think if we do swing back up here, I think traders are going to sell. So I maintain a bearish bias. If I was going to trade, I would wait for that corrective move. You can, of course, there's nothing wrong. You know, there's other markets. I think yesterday, EOS, this is EOS. EOS just took out its low. So that's a fresh sort of position. Here as well, it might be possible to work with a stop just above the high. I think Litecoin, actually Litecoin is too late now. I would suggest you just look through the whole list and see what's interesting. Here's crude oil, and I'm neutral crude oil, as you know. The technical trend itself remains bearish, and the market is still creating these higher and higher lows. And I'm neutral, and I think this sort of probably going to trade sideways for a bit longer, maybe even trade up higher. I don't think it's time to turn bullish, but I definitely don't want to sell. I think I'm going to break to 64.74. Yeah, I'll turn bearish, and this heads to the downside. But until that happens, might be sideways, potentially up. And here is price of gold. Here, the technical trend as well is bearish. You know, price has this high up here, and you see, I've been bearish, and there's nothing wrong with keeping that bearish positions to sell the short from here. But I give up on this one, and I'll resume my bearish stance on a break to support. If we start to trade to the upside, this market probably would have bottomed out. And here, this is the German DAX. There's not much happening here right now, and I think you're better off trading stock markets like the S&P on a pullback, the NASDAQ on a pullback. In fact, let me show you something interesting with the NASDAQ. So this is a weekly chart. Actually, we can just stick to the daily. This is to some extent a big range. Should we take that into account? Maybe yes, maybe no. I think we probably should not take that into account. This is a range. You had a double top to some extent. There's a rectangle at least. So basic patterns sort of suggest that when you trade above here, you'll get 1 times the range. So the range, this is the range, and from that sort of perspective, we could push to the upside. So when has this happened before? Well, it actually happened down here. Do you remember this episode? Sort of different time, 2006. And it even, you actually don't see it here, but let me load the S&P. This is the S&P. Let's load a monthly chart. Again, sort of not the cleanest pattern, but clearly a level. And when we took out these levels, if you were following me back then, you'll know that I was very bullish when we took out these levels. Similar sort of situation. And fib-wise, from this high to this low, 50% or 819 points. From this perspective, we already reached that target. So this maybe is running on overtime. But what is interesting is these subsequent smaller patterns. And the Nasdaq just breached one of those. Okay, let's see if you have any questions. So if the Fed just increases interest rates today, it's not going to strengthen the dollar. Why? Because 95% of people are already positioned for a rate hike. What's interesting is if they're going to push for a 4th rate hike this year, because we looked at the numbers and I think it was about 45% likelihood that that's going to happen. So there's a 55% likelihood that it will not happen. So 55% of the market is not convinced that we're going to have that 4th rate hike. So what you want to look for is things like change on the dot plot, which I think it should be updated today, and sort of projections to what may happen if they're going to push for a 4th rate hike. And that's really what you want to be looking for, because just 1 rate hike is not going to cut it. And as always, when you sort of look at the market, if you're trading the euro, you look at the euro and you want to see what's happening with the euro. Does it take out a support level? Does the pound take out a support level? Does the Aussie dollar turn lower? So the more of the majors that actually sort of go with whatever news and is being published, if all of these markets turn bearish, then it would be silly for us to remain bullish. And if just one goes bearish, like right now, it's just the pound being bearish. So maybe there's something wrong here with this market. I'm not really sure. I think we had economic news just out. I guess that inflation numbers were lower, I guess. I didn't look at those numbers, but yeah, 22.4. That's the headline inflation number. And instead than the 2.5 anticipated. And core inflation at 2.1. So I guess that's a softening. So this is declining on the back of pound or UK data. And obviously tomorrow, to this afternoon or this evening, you need to sort of look at it from a bigger perspective. What's going on with all the markets, and are people buying or selling the dollar on the news? Okay, I think we're gonna wrap things up. I want to thank you so much for watching. If you like the presentation, click here to like the video. And yes, before I forget, let's take a look at that delta. So let me just explain to you what the Delta Trader is. Delta Trader program, you just trade with an Amana Capital trading account. So similar sort of stuff you'll find from all the bigger brokers. They have MT4, MT5. You can trade cryptos, you can trade Forex, you can trade commodities, you can trade stock market indices. So they have quite an ample amount of sort of markets you can trade, and you can read more about that on Amana Capital's homepage. And traders that join, they literally just sign in with their account, so they're literally registered, and then they trade. And they trade their accounts as they always been trading their accounts. Well, maybe actually much more professional, much more disciplined, hopefully, after joining the program. And then they trade. And every quarter, the team at Amana is going to look at the results and say, okay, this guy did this well, this guy did that well. And we have numbers, metrics. So one thing is profit factor. So the profit factor has to be 1.5 times. That means that if you make, so how do you even calculate profit factor? Well, it's sum of total profits of sum of total losses. So they're going to take all your profits. So say that you made 150 pounds, and to generate these 150 pounds, you lost 100 on the process. Well, 150 divided by 100, that's 1.5. So you just met the first criteria. The other criteria is that profitability needs to be at least 45%. So if you trade 100 times, then at least 45 of these trades needs to be winners and 55 can be losers. The other step is the risk-reward ratio. So average win over average loss. Now, if you're that kind of guy that wins 100 pip and loses 200, then you're not going to be managing money. But if you're the sort of guy that makes an average profit of 15 pips and an average loss of 10 pips, then you're going to be welcome. And that's the metric for average win to average loss. Now, what is interesting is that they always look at these ratios. So you might be a guy with 500,000 trading, or you could be a guy with 5,000 trading or 2,000. The likelihood that you're going to win here is not dependent on your account size. It's just depending on any profits you make in relation to any losses you make. So it's not like your program, the average broker program is literally sign up with us, trade as aggressively as possible. And if you do 500% or something like that, so you come on top, you'll get some money. That's beneficial for the broker, because the broker knows that just a few are going to win and the rest are going to blow up. And if it's a market making broker, then they're going to make money on the back of those losses. Whereas here, that's not what we're measuring. We're measuring risk adjusted returns. Why? Because 514 Capital is actually a fund manager that manages a few millions already, and they've been doing that for quite some time. So they're looking to supplement and sort of looking for people that can manage money in a smart way. So it's a good little opportunity. And what's in it for you then? What's in it for the trader? Well, what's in it for the trader is that you could potentially manage 100,000. So this million is distributed to the top 10 traders. So every quarter they look, okay, do we have 20 top traders? Well, then let's just give it to the top 10 of these 20. And they get 100,000 each. So what's the benefit? Well, you keep 20% of profits. So to give you an idea, say that you have 20% or $2,000 on your account, and after 1 month you make 10%. So that's a profit of 200 to your pocket, right? You keep that, that's your money. But 10% on 100,000 is 10,000 profit, and you keep 20% of the 10. So then 20% of 10,000 is 2,000. So you trade with your same strategy that you're doing today, but in one scenario, you make 200, and in the other scenario, you make 2,000. So obviously, if your account is sort of sub 10,000, something like that, then this becomes more and more interesting. Whereas if you already have 100,000 in your account or above, then this becomes less interesting. Now, the cool thing and the benefit of this, though, is as well that it opens up doors. So say, for example, you get access to the money, you trade with that for a year or two, then you could say, hand on your heart, and you can say to people, look, I manage other people's money, or I trade other people's accounts. And that opens up more possibilities. Say that you're managing $1 million or 2 million. Say you're managing $2 million, and then in 1 month you make 10%. Well, that's a 200,000 profit for that month, and then you make 20% of that. Well, you just made 40,000 that month. So that's the way I would look at it. If you want to know more about this, I suggest you go to Amana Capital and then click on Delta Trader up here. Are there risks involved? Yeah, of course. You're gonna still be trading a real account. You need to prove yourself with your real account to begin with. So if you're trading with another broker today, then obviously your risk is not going to increase unless you alter your trading strategy. But if you never ever traded before, then your risk is going to be as high as with any other broker. So you need to bear that in mind. So that's the catch, really. You need to prove yourselves with real money. Okay, let's quickly see if there's any questions. If there's not, we're gonna wrap things up. Yeah, anybody can apply. So we got a question here from AdFresh. I'm not an amateur, neither a professional yet. Can I still apply for this program? Yes. So they are looking for sort of raw talent. That's what they're looking for. Because I would guess if you're already really good at managing money, then you're probably already managing, as I said, more than 100,000. So then people wouldn't necessarily apply for that. Some people apply, but most people wouldn't necessarily do that because they already have the money there anyway. So yeah, it's definitely for people that you can be new. You can see it as a perk. You don't have to see it necessarily as, it depends on how you look at it. It's like a nice perk. So literally anybody that trades with an Amana Capital account has access to this program. It would have been great if all brokers had it, because I think the number one challenge with that small traders have is that they're too hungry. And you might remember when you were a kid, I don't know, not everybody has these experiences, of course, but when you were camping, right, with school or something like that, or you were out in the woods with school. I was born in Sweden, so we have a lot of forest, and I used to be in the scouts even. So when you were in the scouts, like I was, then you would do like, not a barbecue, but you would prepare food. So you usually do these hot dogs on top of an open fire. And of course, if you're really hungry, because you've been out walking all day, you really just wanted to cook your food really quickly, and you would literally, put the meat too close to the fire, and then sometimes the hot dogs would get burned, and then you would eat that because you were hungry, but it didn't really taste that good. It's the same thing with trading. There's a lot of people with small accounts that are very hungry. They just want to succeed, so they try to do 10% per month. They do, to give you an idea, like I met people that want to do even more. They want to do like 4 or 5% per day. That's impossible in the long run. So what happens is that they might have 2-3 good months, and then they get burned, 40% loss, 50% loss, because they train too aggressively. The professionals, they don't try to do that. If they're managing like institutional money, they try to do 10% a year. If they're managing, if this is more of a high risk fund, they try to do maybe 20 or 30% per year, but never in a month. So what's the trick then? How do they survive? How can they survive? Because they have rich friends. They have a good fund, or they work for a big bank, someone that funds them the money. So when they get those 20%, they'll get those 20% of a big pot. And yeah, I have my own results to talk about it. Like, my own results in 2014 are the following: 34% return in 2014, 18.5% in 2018, minus 21 in 2016, and 124% in 2017. And this year I'm up with about 35%. But if we ignore that, then since 2014 I'm up with 264%. And this, you know, when you trade the way we do here, it's something that is possible. I'm the living proof of that. And sometimes you have amazing years. This is because cryptos primarily. I got 2 good trades that delivered literally 10 times the reward. So I was risking maybe 10%, then I literally make 100 on both positions. So that's why I have these massive returns. And this year is mostly because of the S&P. But this is sort of what I am aiming for, because I know that, you know, if all the big guys can do it, then I can do it as well. Maybe I'll be one of the big guys one day. So this is what I'm aiming for, and obviously I have a bigger account than most people has. So when I make money, I'm happy, my wife is happy, everyone is happy. And that's it. You know, when I started trading, I had a 2,000 euro account in 2006, and yeah, I think I made 40% the first few months, but then I lost all of it plus a bit more, and that's just because of the leverage. When you understand that leverage can be to your benefit but can also hurt you, then you sort of start to adjust, you mature. Okay, all right, I'm gonna wrap things up here. I do need to go now. Guys, you've been an amazing crowd. I want to thank you so much for joining me this morning. Don't forget to click on that little button and like the video down here. Thanks for watching. Thank you.